Hello, welcome back to Financial Accounting and 6. In this video, we want to look at the preparation of statement of cash flow or the cash flow statement. So this is the question that we have, which is our question 4. So remember, in the last video, we did prepare the notes to the statement of cash flow. So in this video, we are now preparing the statement of cash flow based on all the pre-calculations that we did in the last video. So you'll see that our statement now reads, study the information provided on machine close cooperation below and answer the question. So you're given machine close cooperation, whereby you're given a statement of comprehensive income for the year ended 29 February 2016. And then you're given the statement of comprehensive income that is going down. So you need to go through this before you start to answer. Now we go to the next page, and you see that we are also given a statement of financial position in 29 February 2016 here. So this is the statement of financial position that we are given. Then we've got two periods that we are given. Here we've got 2015, which is the previous year, and then 2016 being the current year. So if you go down to see that we are the statement of financial position is continually going down, and then I believe that now we are given a note of property and equipment. On the note of property and equipment, we also have information for the two periods, which is 2015 and 2016. And then beneath our notes, we have got some statements that we are given there, whereby the first statement reads no property and furniture was bought during the year. So it means that we don't have any non-current asset that was purchased during the year. Then we can move on to the second one, which is saying furniture was sold during the year. And then last one, related buildings were sold at cost price. So very important. So you see that there are key points that we have to take note there, whereby the first point is saying no property and furniture was bought during the year. So we have no non-current asset that was purchased. And then on the last point again, land and the buildings were sold at cost price. So it means we are just going to calculate the differences that we have in terms of the cost price, and we will see the amount that we sold the land and building. So basically that's what we have, and we'll try to see what we have on the next page. So you see that on the next page we have got the questions that we are having according to this video. So, but according to this video, we are only going to look at 4.1, where is the statement of cash flow for the year ended 29 February 2016, and it's got 17 months. So you see that 4.2, which is cash received from clients, and then 4.3 cash paid to suppliers and employees, 4.4 distribution and taxation paid. This we looked them in the last video, so we can just try to go to the solutions that we did in terms of the last video. So if you come here, you would see that this is what we prepared about the last video, whereby we are having the cash received from clients, and we got this figure as 389,200, and then we go to our distribution and taxation page, whereby we got the balance for distribution, which is going to be this one, 13,580, and taxation 14,804. So both of them being negative. So we go to the last part where we have where we prepared the cash paid to suppliers and employees, whereby we got the figure that we got is here, which is a negative again, 204,620. So these are the figures that we are just going to transfer to our statement of cash flow. So if you go to our statement of cash flow now, you'll see that we are going to start from cash flow from operating activities. So coming here, so this is our cash flow. So we're going to start from cash flow from operating activities. So cash flow from operating activities, remember we have got the pre-calculations that we did. So we can just simply start from there, whereby we are saying cash received from clients is the first one, cash received from clients. So this is the figure that we calculated last period. And then also we've got cash paid to suppliers and employees. So we are just going there to our answer section and pick those figures. So you know that as we were checking them, the figure that we got for cash received from clients 189,200. So we can put them in this column. whereby we're saying here we've got 389,200. And then it was also cash paid to suppliers and employees. We got our 204, 204,620. And we got it as a negative figure, so we can just put it in brackets. So from there now, we also have we can also try to see what are we supposed to put beneath that. So here, when you add your cash receipt from clients, then you add it to cash paid to suppliers and employees, which is simply going to be 389,200, and then obviously a positive and negative will give you a negative. So I'm going to say 389,200 minus 212,620, and then the figure that we are going to get here. So you can just maybe try to put a line so that we are uh, subtracting them. So the answer that we're supposed to get there is 176,580. And the description of this figure is cash taken up from operations. So here we're just saying cash generated from operations. So this is what we have in terms of cash generated from operations. Then beneath that, remember interest received, salary to member, and also we have interest on members loan. We did adjust interest received and interest on members loan in the note there, and we're saying we are removing it and we readjust it again now under operating activity. So we are reinstating those two, that is interest received, interest on members loan. We are reinstating it again in the cash flow statement under the operating activities. And the reason why we said we are readjusting it again in the cash flow statement is that it's just a procedure for disclosure. So this is what we remember. Our interest received also and our interest of members loan involve cash movements in and out of business. So by removing them in the notes, we are just making it a disclosure procedure whereby we readjust it again in the cash flow statement. So this is what we have. Then so I believe that now we are going to check the figure that we have for interest received. So here we can say interest received, and then we check the figure that we have for interest received. Obviously, that figure we have it in the statement of comprehensive income in the question. So we come here. So if you come here, you would see that we are going to see your figure for interest received here, which is going to be 4,000. And then interest, the other interest that we have is interest on members loan, whereby we are having 20,712, and we are also having our salaries to members 96,000. So starting with our interest received, it's an income, so we are receiving. So we're going to show it as a positive because it's an inflow. It's a cash inflow, which is going to be a positive. Then for salaries to members and interest on members loans, they are outflows, so they're going to show them as negative figures. So let's just try to go back and adjust for that. So our interest received, remember, we've got our 4,000, so we're going to just show it as a positive figure, which is our 4,000. So we can just try to adjust it as such. So here we've got our 4,000. And then I believe that also we have got our interest from members loan. So we can just say interest on members loan. So the figure that we have for interest on members loan on loan, remember, it's 20,712. So we're going to have our 20,712, and you indicated that it's an outflow, so we're going to show it as a negative. Then also salary to member. And the figure of salary to member that we are having there under the statement of comprehensive income is 96,000, and we are saying also it's an outflow, so we're going to show it as a negative. So the The other figure that we are supposed to add just beneath that is the distribution to members. Remember, we got a note that we prepared for our distribution to members. So we can just try to go down and refer to that figure that we have in the notes. Remember here, that's where we calculate our distribution, which is distribution to members, which is in this column, whereby the final figure that we got was negative 13,508. So this is the figure that we're going to carry there. So here we are saying 13,580. And we are saying it's a negative, so we can just put our brackets. Then we also have the issue of taxation. Taxation paid. So remember, on the issue of taxation, we also have it, and in the notes, I remember we also prepared a note for taxation, so we can go back again, try to see what the actual figure we have for taxation. We are here and we see that the figure for taxation that we have is here is 14,804. So we can just go back. So we are saying 14,000. 804, and it's a negative again, show it in bracket. So having done that now, we can be able to find the net cash flow from operating activities. So basically here, the description that we are giving there is now the net cash flow from operating activities. And we know that this figure that we have, we're going to find it by just calculating the figures that we are having under operating activity. So we are just starting from cash generated from operations, and it says 176,708. We add our 4,000, subtract 20,712, subtract 96,000, subtract 13,508, we subtract 14,804. And you see that the net figure that we're going to get is a positive, a positive 35,484. So here we are saying 35,484. So having done that now, we can move to the next section whereby we are now looking at cash flow from investing activities. So we are saying cash flow from investing activities. So we are saying this is our cash flow. Cash flow from investing activities. So we're just going to list all the investment activities that we have in the question, but if you go back there, you see that we are given a hint in terms of other investing activities that we have. So we come here. So investment activities, we're going to have them here. Remember, we are saying no property and furniture was bought during the year, which is okay to leave that one. Then we've got furniture which was sold during the year. So before we calculate the furniture that was sold during the year, let's try to look at land and buildings which were sold at cost price. So we are just going to say the cost price for the current period, which is 480,000 for land and buildings, minus we subtract it from the figure that we were given in the beginning, which is for the previous period, which is 885,000, 885,320. In other words, we're saying 885,320, and then we subtract 480,000. And you see that the figure that you're going to get there is 405,320. So this is the amount that we sold at these landed buildings, which is at cost price. So we can just go and measure that one is our proceeds from sale of landed buildings. So here we are saying proceeds from sale of, land and buildings. So the figure that we got there is 405,320. So we are saying we just put it into here is our 405,320. Let me check out the next investing activity that we have in the question. So this is the first one, little buildings were sold at cost, and then we have proceeds from sale of land and buildings, proceeds from also sale of furniture, which is being highlighted here. We say furniture was sold during the year. So for us to find the figure for furniture that was sold during the year, we are just going to prepare a T account whereby we are going to have our opening carrying value at the beginning, and then obviously we're going to subtract the carrying value at the end, and then also we subtract the depreciation, total depreciation for the year, and then we have the when we do that, we are going to get all the disposal at carrying value. Remember, we are going to say carrying value, carrying value at the beginning. If we had any current asset that was purchased, we're supposed to add it there, but we don't have any current asset that was purchased during the year. So what we are going to do, we are just going to subtract carrying value at the end, carrying value at the end, and then we subtract again depreciation, depreciation for the year. Right. So when you do this, the figure that we are going to get is equal to the figure that we get there is going to be disposal at carrying value of all the assets of all non-current assets that we have in the question. So basically, we are saying carrying value at the beginning. If you come here, we are going to say our just try to see. So we are going to see that the carrying value at the beginning that we have. So we're going to use the values for the total for the assets that we have, so that we can get the total disposal carrying value. So we are going to see that our opening carrying value for all the assets is going to be 1,041,320. And then carrying value at the end is going to be this one, which is 542,868. And then we are going to add our depreciation for the year, which we get in the statement of comprehensive income, which is here. Our depreciation for the year is this one. We're going to subtract it again, which is this one, which is 19,408. And then you get the total disposal at carrying value. Then you can, from there, we can be able to find a disposal using our, which is our furniture. Because we're not given the figure here, we just told that your furniture that were sold. So what we're going to do is our opening carrying value. Our opening carrying value is 1,041,320. So we're going to say 1,041,320. 1,041,320, which is here carrying value at the beginning minus carrying value at the end. So let's just check the figure for carrying value at the end. So if you come here, you see that the carrying value at the end is the one that we are given here, which is this one, which is 542,868. So here we are going to say, let's just try to see. It's going to be our 542,868. And then also we are supposed to remember we said to subtract carry value at the end. Then we subtract again depreciation for the year here. So depreciation for the year we are saying you get it here. And the figure that we have is 19,408. 19,408. So when you do this, the figure that we are going to get now is going to be this one, which is a disposal at carry value for all non-current assets. So we just try to calculate there and see what we get. 1,041,320, and then you subtract your 542,868, and then you subtract 19,408. And then the figure that you are supposed to get there is 479,044. So inside this 479,044, we have got two disposals. If you come to the information that we have here, you would see that non-current assets that were disposed or that were sold, we have got land and buildings here, and also have got furniture. But for land and buildings, we have already calculated proceeds from the disposal. And that figure that we got is come to the other section. We've got that figure that we got, which is proceeds from land and buildings. We got 405,320. So if you subtract that figure from the figure that we got there, be left with the disposal of furniture. So we are now saying 479,044 is going to subtract figure for proceeds for sale of land and buildings, which is 405,320. And then the figure that we are left with now is proceeds from furniture. Then we are saying now 479,044 minus 405,320. Then the other that we are supposed to get there is 73,000. Then the other that we get is 73,724. So this figure, remember, when a non-current asset is sold or is disposed at carrying value, there should be no profit or loss. The profit will be zero. So there will be no profit or loss. But in this case, if you go to our statement of comprehensive income, let's just try to see what we have. If you go to our statement comprehensive income, you'd see that there is a profit. There is a loss, sorry. You've got a loss of furniture here, which is 10,000. So it means it wasn't disposed at carrying value. So this, if there's a profit, we are supposed to add it. So we are supposed to subtract it from this figure. So we're going to say minus 10,000 to get the figure that we disposed that furniture. And when you subtract there, we get 63,724. This is going to represent the proceeds now from our sale of furniture. So we go to our answer section. And just as such, we're now saying proceeds from sale of furniture. And the figure that we got there, 63,224. And they are both positive because we are receiving money as we sell. Then if you go to the you go to our statement of financial position, which is here. You will see that we also have investments, which was 20,000 in 2015, and now it's now zero. So what does it mean? It means there was a maturity of investment. So when the investment reduces like this, the balance reduces, it means we received money as a business, it matured. So we matured with 20,000. So we go there and indicate that one again as part of our investment. So we're saying uh, we're going to indicate it as proceeds for maturity of investment. For maturity of the figure that we have there is 20,000. It's also an inflow. So this is what we can now be able to we can now be able to add them. That is, we add 63,724. Let's try to calculate it. 63,724, and then you add your 405,320, and then you add your 20,000, and then your final answer that you're supposed to get is 489,044. So this is going to come in with 489,044. And you are saying description of that figure. It's now going to be net cash flow from from investing activities. So we're saying net cash flow from investing activities. So this is the representation that we have there. So it means it's representing this figure, net cash flow from investing activities. So from there, we are now going to the net cash flow from financing activities now. So this is this next subheading that we have, net cash flow from financing activity. So we can just type there, go there and pick the financing activity that we have. So coming back on our financing activities, you would see that we are going to check our members' contribution for financing activities, and also we are going to check our loan movement of our loan. So if you start with the members' contribution, you're seeing that remember this is our 2015 and this is our 2016. So it's a movement from 180,000 to 210,000. So we're going to see that if you subtract the two, if you say 210,000, and then you subtract your 180,000, you are going to get your 30,000. And then this is indicated by an increase in members' contribution. So you'll see that we're going to show it as a positive, as additional member contribution. So we are going to show it as a positive, and then we go to loan member, which is now a movement from 900,840 to 302,332. So to find the difference now, we are saying 900,840, and then we subtract 302,332. And obviously, we do calculate like that. We see that the figure that to get there is 598,500. Let's try to see. Yes, 598,508. So you can just maybe try to verify this figure if it's correct. So we are saying 900,840, and then we subtract to 302,332. 2,332, and then you're going to get you 598,508, which is correct. So this is the figure that we have here. So we are seeing again that this one is now indicating a decrease. So if it's a decrease, we are going to show it as a negative. So to be a negative 508,508. So those are the two that are going to be under financing activities. So we go there. So we are going to start by the additional member contribution. So we are saying additional member contribution, and the figure that we have there it's going to be 30,000. And we are saying it's a positive. And then we have got also repayment of loan from members. Could just maybe repayment of loan or just decrease in loan. So correct. And you see that the figure that we are getting there is a negative, which is going to indicate as a negative 598,508. So obviously we show brackets, so that's the negative. Then we can now find the net figure by taking 30,000 minus 598,508. Obviously our answer is going to be a negative again, which is 568,508, and it will be a negative one. So this is what we have, and then the description now it becomes net cash flow from financing activity. So here we are saying net cash flow from financing activities. So this is what we have in terms of net cash flow from financing activities, and we see that the figure that we got obviously it's a negative figure of 568,508. So this is what we have. Then I believe that now we are going to see whether we have got a decrease or an increase in cash. How do we find it? We are going to say we start from the beginning. Remember, we've got here net cash flow from operating is a positive 35,484. And also we have got the second one is indicating a positive 489,044. So we are going to add it to 35,484. Then the answer that we get finally, we also adjust for financing by subtracting 568,508. So basically, this is what we have. Then the final figure that we are going to get there will indicate an increase or decrease in cash. But we'll see that the figure that we're going to get there is going to be a negative, which is 43,980. And here we're just going to give a description of decrease, because we are saying the figure that we got there is a negative, so it's going to be in brackets, and here we are saying decrease. We're indicating it as a decrease. So we're saying decrease in cash, and then from there now we can now add cash at the beginning of the year. So here we are saying cash at the beginning. So cash at the beginning, we get it in the statement of financial position. So you can go there and try to check in terms of the bank balance that we have for 2015, which is the previous year. That will indicate for us the balance that we have. So here we see that we can maybe try to remove this. And we know that our current assets are here. We've got cash in 2015, we've got 10,780. So this is the balance at the beginning. And we see that we don't have any overdraft here at the beginning, which is here in this column. We don't have any overdraft. So we've got 10,780 is a positive, which we are going to add to the decrease in cash. So we have got our 10,780 as a positive. Obviously here we are going to say 43,980 plus 10,000, negative 43,980 plus 10,780. And then the answer that you're going to get there will be now negative again, 33,200. And this is now the balance at the end. So here we're saying balance. We are saying balance at the end. Balance at the end. So this is our balance now at the end. So we can now try to see in terms of the balance that we are having, and we're seeing that this is our balance, and we say negative 43,980 plus 10,280, your answer will still remain as negative. So it means this is going to, if it's a negative, it indicates a bank overdraft. So it means if you go there, we need to see a bank overdraft of 33,200 to show that we have done our cash flow statement correctly. So you go back to the question to cross-check if we have done it correctly. So you see that if you come here, you'll see that now as a closing balance, we've got a bank overdraft of 33,200. So this is the same figure that we are having as our closing figure, as our final figure in the cash flow statement, which is here. Which is 33,200 here, indicating that we've done our cash flow statement correctly. So this is what we guys are putting in this video. Let's subscribe and share. Let's share the link to our colleagues who are doing financial accounting at 6. Let's turn on the notification button so that when we upload new videos, it will assist us in the preparation for our final exam. As for this video, I'm signing out. Let's meet again in the next video.